Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 3rd of July. I'm Daniel Lam, your host for the podcast. At the start of each month, it is always a useful exercise to think about what happened in the previous month and how the market reaction has been since. Well, June was certainly not short on exciting moments. For example, the dramatic moves in Indian assets following the elections. However, the fact that the BJP lost its majority and that it is now ruling by leading the National Democratic Alliance coalition could strengthen India's position even further. At least, that is what the Nifty index is telling us. The reason is that the new coalition will largely be able to continue the structural and regulatory reforms, as well as the prudent macro policies it has been pursuing over the past decade. But at the same time, the election rebook will force the new government to address the issues that caused BJP's disappointing election results. So this includes years of stagnation in rural income and high youth unemployment. Now, the fact that food makes up a very high 46% of the consumption basket and 54% in rural areas meant that high food CPI led to discontent amongst the voters. So those issues need to be addressed. Now, the rural or the agricultural sectors employ more than half of India's 500 million labor force. Now, this sector have long suffered from ongoing climate change and a looming water shortage. So if the new government gets it right and tackles these issues, that will be another positive for India's long-term sustainability. So therefore, we continue to like our tactical buy on INR bonds. We continue to believe the asset class offers attractive risk-reward balance in the backdrop of structural growth and lower than peer currency volatility. Also, we like Indian equities, especially the large caps. It is true, the valuation is not cheap, but similar to US equities, you do pay for what you get in the form of very high return on equity. Now, for the long term, India's favorable demographics and growing middle class consumptions are strong underlying structural drivers for these two ideas. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.